So today's question, we're going to be looking at what types of commercial property kind of property partner, I guess, focus on, and why. Because as we've said before, Xavier, there's a whole range of options out there. So where do you tend to see performing and being interesting, I guess, at the moment, and why are you looking at those?
Well, it's really funny because I started out my career in industrial property, and I suppose that's the least favoured sector of commercial property investment. The yields are very generous, and you know, it's quite, you know, it's very technical, and I used to look at my colleagues who were dealing with the high street, and they were just doing these, you know, buying these things, and everything.
Not quite as interesting.
No, everything was fine, and it really, the tables turned enormously in the last few years with the internet. The high street's become very problematic and very difficult. It will establish itself in a new area, but nevertheless it's difficult. As with industrial, obviously, and warehousing, that's become flavour of the month. So these big distribution sheds, last mile delivery, and all the rest of it has driven this sector. And a lot of industrial land is being converted into residential because of the demand for residential. So there's a shortage, and there's a shortage of supply, and there's both in terms of leasing and in terms of in investment.
So good old supply and demand kind of pushing prices up, and
they really have, and so, you know, I think it's really up with events, and it's been a big driver of the commercial property returns over the last year or two. I mean, I think well, certainly commercial property has been, if you look at it as a whole, it's done very well with yield shift, but in this particular sector, that's what's driven the yields down.
And are you seeing any other sectors kind of, such kind of retail? Obviously retail's gone the other way. We mentioned kind of off camera before about like things like Woolworths and even Blockbuster and stuff, like these big high street brands that everybody kind of knew and trusted and liked for their covenants and leases. Obviously it's just changed the...
Well, I live in Fulham, and you know, you can't get down any road without, you know, being blocked off by a white van delivery of one sort or another. And certainly if I'm working from home, the doorbell's going, you know, 19 to 1,000, and difficult to concentrate on anything. So I'm you know, it's amazing what's happened over the last few years, and it's built up, and you know, it's still going to carry on. Obviously, there's a tremendous momentum. So the high street is going to have to, it's really struggling like this. But there are areas where, you know, it's become, you know, really good. I mean, there's an area where I live very close by, it's in Barnes. They're nearly all independent shops, and you know, so we've got a thriving local community with us, you know, local art cinema and all the rest of it, and you know, and it's found its equilibrium. But it's going to be much harder in some of these towns in and around the country.
So what makes it through to getting a kind of a yes from you and you guys on a commercial basis? Is there a particular type of commercial that you really favour?
Well, I've seen, like we all have, with the advent of the big supermarkets and the monthly shop that we all used to do, you know, powered eye, you know, your trolley baskets, powered eye, shove it all in the back of the cupboard and forget about it. Well, those days are gone. You know, those are now sort of mostly being delivered to the home. And what we're doing, what people are doing, is they're topping up that in the local convenience store. So the first thing we did was we bought Sainsbury's local, just outside Leamington Spa, in a very nice residential area. It's where you go and get your newspapers, you know, you get a few things for Sunday lunch and stuff like that, and then you get used to shopping in that way. And if you look at the results of the supermarkets, that's really where they're concentrating their effort. You know, they've all got a program to roll out these local convenience stores. They're prepared to take long leases for these. They're kind of affordable in commercial terms. And so we did one of those. It's got a 15-year lease to Sainsbury's. Sainsbury's covenant is really strong. And if you read their results, which I think on way here this morning actually, they came out with 6 months results, are very strong, and they have a particular emphasis towards their local convenience stores. They've still got a rollout. They've all got a rollout to this area. So I think that's very interesting.
So from an investor's viewpoint, there are options within that mix of property that gives them some sort of stability.
Yes, and I think from one of the big aspects of positive aspects of commercial property is its income, and you get nice long leases, well secured. So in this particular case, 15-year lease, and it's indexed. So to get an indexed income with kind of bond-like qualities is very difficult and expensive. So, but we were able to launch that on our site, showing approximately a 5% return, very secure and indexed. So I think as an alternative to having the money in the bank and or against other asset classes, you've got the diversification of something like that, providing a nice steady income to your portfolio as a whole.
So, thank you.